Hey, what's up guys? Welcome back to the channel. My name is Frank Mularcik, and in this video we're going to be doing a brief stack analysis on Palantir stock, ticker symbol PLTR. So this is in fact a software company, as we can see on their website. So they do not pay a dividend. They're pretty new. I think they got listed or IPO'd on the stock market probably sometime in 2019, I believe. So they're pretty new to the stock market, but they are making a lot of headlines, at least within the stock market, and a lot of people are pretty excited about them. And I, am pretty excited about it because it sounds like some pretty interesting software that they're working on. So basically, they are working on foundational software of tomorrow that they say is delivered today. That's an interesting catch. And they say we build software that empowers organizations to effectively integrate their data, decisions, and operations. So that's one of the biggest things, moving forward for a lot of businesses is, they need the software to support, just their business, and in order to get that competitive edge, I guess. So that's sort of what Palantir does. And they have some, news articles here on their investor relations. We're just going to look at some of the headlines, but I think they're pretty interesting. So, Palantir and Faurecia are embark on a long-term strategic partnership. I had to look up this company, but basically they're a French automotive manufacturer. They don't actually manufacture actual cars, but a lot of the parts that are involved in cars, I believe. So that's pretty interesting. Palantir and 3M expand relationship to build dynamic supply chain. So anytime you see a company working with 3M, that's awesome. Palantir and Akin Gump collaborate on legal digital service platform. Palantir Technologies and Rio Tinto sign multi-year enterprise partnership, and then many other articles here. They're working to enhance the safety and reliability of the electric grid in California. And I know they do have some deals with the government, with the Army and military. Yeah, here, Palantir selected to deliver a prototype for Army's ground station modernization. Expands Japan business with $22.5 million contract. So that just alone are some nice little headlines, just to give you an idea of what companies they're working with, what governments they're working with, and how vital some of their technologies could be to some companies and governments. So we're going to look at the Q2 2021 earnings results. So they released these earnings in the beginning of August 12th, 2021. So they reported 49% revenue growth, and US commercial revenue grew 90% year over year. So they had total revenue, as it says, grew 49% year over year to $376 million, and U.S. commercial revenue grew 90% year over year. They closed 662 deals of $1 million or more, of which 30 million are $5 million and 21 are $10 million or more. So that's pretty good to see. A lot of high dollar deals there. They had 20 net new customers added in Q2, total customers up 13% quarter over quarter, and commercial customer count increased 32% quarter over quarter. Cash flow from operations was $23 million, which represents a 6% margin, and they had adjusted free cash flow of $50 million, representing a 13% margin. They had a GAAP net loss per share diluted of 7 cents and adjusted earnings per share of 4 cents. So essentially they're getting close to that profitability, being profitable milestone, which is good for investors to see. Obviously, a lot of these new companies are, not profitable, and that's kind of expected. That does not make it completely acceptable, but it's just something that often happens with new companies as they are trying to grow rapidly. So from the first half of 2021, total revenues grew 49% year over year to $717 million. Commercial customer count increased 61% since the end of 2020. Cash flow from operations $140 million, which represents a 19% margin, and adjusted free cash flow of $200 million, which represents a 28% margin. So they have the numbers here, but we're going to actually look at them in the 10Q, where they're presented a little bit better. But they also talk about the outlook. So for Q3, they expect about $385 million in revenue and adjusted operating margin of 22%. And for the full year of 2021, they're raising their outlook for adjusted free cash flow. Basically, they're saying in excess of $300 million, and previously it was $150 million. And they are also continuing to expect, which I guess is not really an update, but just continuing to expect annual revenue growth of 30% or greater for 2021 through 2025. So that's saying they're expecting to grow their revenues 30% every year from 2021 to 2025 at least. So that's pretty interesting. And just looking at this 10Q here, we can see some of the balance sheets here, and then we're going to look at the income statement. So this is the balance sheet. Current assets are around $2.66 billion, I believe. Yeah, $2.66 billion there in current assets, and total assets are $3.1 billion. Current liabilities only around $682 million, while total liabilities just over $1 billion. So in terms of a balance sheet, I definitely have not looked at a ton of balance sheets from newer tech companies like Palantir. So I guess I just don't have as much experience with these types of balance sheets as other companies, such as like a solid dividend company like 3M or Johnson & Johnson, because generally speaking, those are a lot of the companies that I analyze more regularly. So I'm not sure how typical this is, but to me, for a new company like this looks like it's a pretty healthy balance sheet, and they really have a lot of cash here that they can use to invest, in new technologies basically, and further develop their software and basic offerings, I guess, for their customers. So that's pretty good, I think, as the balance sheet goes. And then looking at this income statement, revenue, they had around 376 million in the second quarter of 2021, like we said, which was compared to 251 million last year. And then for the first 6 months of the year, they had around $716 million in revenue compared to $481 million in the first 6 months of 2020. So pretty nice increases there. Their operating expenses obviously are going to increase as well, around $284 million this quarter compared to $183 million the prior quarter. And basically their losses are also generally decreasing a little bit, but over the quarter, they're generally increasing a little bit, their loss from operations. But when we look at the net loss, the general loss of earnings per share, which is kind of like net income, is decreasing a little bit, or at least the amount of loss is decreasing. So that means the total net income is increasing. Even though it's a negative value, it's getting less negative, which is always good to see. So overall, it's not great that they're not really profitable right now, but it looks like they are, getting a little bit closer to that profitability mark, which is definitely a good sign. I would like to probably, if I wanted to look more into their profitability, go back a few more years and look at that trend, and maybe that data isn't really out there since they're new to the stock market. I'm not positive on that, but overall, I think that the profitability for this type of company is not the biggest deal. I'm definitely not saying that I don't care if a company isn't profitable. I definitely want the company to be profitable and making money. But at the same time, I do realize that these companies, have to invest in themselves and get themselves up and running, and really to a point where they can start growing. And even when you're a new company as well, you're maybe signing deals and getting contracts and stuff, but you're just not taking that money in as much initially until those deals start to take off. And then once a customer says, oh, I like what you're doing, then they're gonna maybe increase the amount they want to purchase from your company essentially as well. So I think over time the profitability won't be that big of a deal for Palantir, but it's definitely something I like to keep an eye on, especially for these newer companies. And since they're not profitable, they don't have a PE ratio, and they do have a pretty short history, so it wouldn't help all that much to look at the PE ratio, I don't think, just because they have only been trading on the stock market a year or two. So we're just going to look at the stock price and try to figure out, I guess just by looking at this chart, where we might want to buy. We can just get an idea. We could do some other methods if we wanted to, but for the sake of this video, I'm just going to show this chart, and we can see at the beginning of the year, they did get caught up in the, GameStop kind of frenzy just a little bit, and they had some really nice days at the beginning of 2021. They got up to above $40 per share. I think looks like the highest close was around $38, $39 a share. or maybe it was, yeah, that was about the highest close we ever saw, which is pretty interesting. But now we've kind of been trading anywhere from $18 to around, you know, $25 over the past 6 months, and it's kind of consolidating a little bit in this, you know, upwards channel, which is interesting to see. It's always interesting to look at those channels, I think. And right now they're sort of at the bottom of the channel, and you can see some of these long-term moving averages here are kind of almost looks like they're kind of converging. So I think, from my understanding of what that means, there could be some drastic movement either way sometime soon. I'm definitely not trying to predict anything, but I think that could happen just based on this chart. And looking back a little bit longer, obviously they haven't been trading that long. They started around that $10 range because I believe they were a SPAC, and that is how they became public. So they quickly, you know, went up here and have kind of been trading in this range ever since. So if we look back on the daily chart and click this advanced as well, for me, I think right now definitely is a little bit too expensive just because of the profitability factor for me. And also, you know, I have been trading options on this stock throughout the past year, just selling puts on them and on Palantir, and just, you know, so I sort of have some experience, I guess, with the price action. And I think right now this price is a little bit too high for me. I definitely like selling puts, you know, in the $20 to $24 range. That's where I'm definitely a bit more comfortable. But for right now, I guess that's where the stock price is. So if you do want to invest, I don't think it's the worst price, absolutely, but I do think that I would personally like to wait until the $20 range. Now, if the stock does get to $20, that definitely does not mean that I would want to buy the company. I'd still have to, you know, do some more analysis to really understand what exactly their technology does. You know, at this point, I know their technology works with big data and, you know, databases and, you know, operations and logistics type stuff for a lot of companies, but I would really like to get a better understanding of exactly, you know, how all that works before I'd like to invest. So let me know what you guys do think of the stock. I think it's a pretty interesting company overall, and I think it's one that could certainly make some waves in the stock market in the coming years. I don't think it's going to be any, you know, Microsoft or Tesla or anything like that, but I think it could do some pretty interesting things. So we'll just have to wait and see. So let me know if you guys do own Palantir, and I will see you guys in the next one.